Here to discuss Tesla's road ahead is Colin Rush, research analyst at Oppenheimer. He maintains a buy rating and a price target of $1,291. And Tim Higgins, Wall Street Journal correspondent and a CNBC contributor. Tim, why did these quotes about the hemorrhaging cash take so long to come out?
Well, first of all, he did them with some enthusiasts, some Tesla enthusiasts, a podcast, and they doled it out as slowly as they did. I think their idea was they were more interested in the excitement of Tesla and the products, and this was just a side note, whereas investors are very curious on what's going on. There's this concern that the factories in Berlin and in Austin could become, the next manufacturing hell, which really hurt Tesla in the past, bringing out the Model 3. Really almost put the company into bankruptcy.
Yeah, so these were remarks made to the Tesla Club of Silicon Valley meeting in Austin, Texas. Go figure. But at any rate, he said they're burning capital. Colin, is this necessarily unexpected? Obviously, when you're ramping up a new factory, indeed two of them in Europe on the one hand and China on the other, there are huge capital costs and certainly expectable hairballs.
I think first we need to put this in context. Elon Musk is not afraid of hyperbole, as we've seen over the course of years.
That's for sure.
So, saying that to get a reaction from a particular audience is not a huge surprise. Second, the supply chain issues, particularly with the shutdowns due to COVID in China, are also not a surprise. Fully digested by the street. And understanding how big that is, short term in terms of cash flow issues is not fully understood. But I think investors really understand that from an order of magnitude. And then you get down to the reality of ramping two factories simultaneously with a couple of different battery technologies, and it's a lot to take on for an organization. And so our sense is that investors really expect some growing pains here, but it's not going to be a revisit of the Model 3 ramp where we had major challenges in terms of the actual factory design in Fremont. These guys have definitely improved the factory design. They've optimized it. They've done it very efficiently in China. They've fixed a lot of the problems in Fremont, and we're going to see these factories get up and going as soon as the supply chain issues really start to ease here in the third quarter.
Colin, your point about hyperbole from Elon Musk certainly is well taken. We know that he does sort of speak in those ways. Of course, as an analyst, an equity analyst of the stock, you need to pay attention to it. But I am interested in what you have to say here about the commentary seemingly in a way designed to help motivate employees. What do you mean by that?
Yeah, for sure. He's used the public realm as an area to help push deadlines, and we've seen Tesla really achieve some pretty extraordinary things at the end of quarters. We're here about a week away from the end of the quarter, and I'm sure they're pushing very aggressively to get as many vehicles out to customers as possible before the end of the quarter. And we think this is an area where Elon kind of does a lot of push-pull, where he encourages folks, but also has a fairly heavy stick with folks to keep people motivated and focused. And certainly as they go through some of these cuts, I think there's going to be an extra focus here for the next couple of weeks, particularly with the folks on staff.
Tim, let's talk about motivation and focus. Here's a guy who has just put is planning to put billions of dollars into what I'll describe as a vanity play, and that is his acquisition of Twitter. Has he got sufficient focus on his main business, the main thing that is generating cash for him right now, or does he need some motivation to pay more attention to Tesla?
Well, it's interesting. When he was talking about these issues that he's having at these factories, he's talking about how it's going to require incredible focus to address it. And this is the concern that some investors have, is that he is not focused in a period of time when Tesla is trying to get to the next level, become Tesla 3.0, if you will, with this incredible amount of growth that they're trying to do. And here's an example of the challenges that happen when you ramp up two factories at the same time. For a traditional automaker with hundreds of years of experience, bringing a new factory online is a really hard thing to do. And Tesla has one of the challenges they have is execution. They struggle with execution. They might ultimately get it. The Model 3 might ultimately come out to rave reviews and generate those kind of revenues, but it's very messy when they do these things. And so, here's a time when he's trying to take Tesla into the next round with new battery technology and new factories. And he's also focused on Twitter, and some are worried about that.
Shepard Smith here. Thanks for watching CNBC on YouTube.